Did you know that trend reversals are still an issue even for advanced traders? So especially if you're just starting out, definitely watch this video until the end because I'm going to teach you exactly how a trend reversal works and you're going to be able to trade it with a lot more success than before. Now, I assume you already know the basics of Forex and you know how a trend works, but let's have a look at this example where price is shifting from an uptrend to a downtrend. Now, we would normally have higher highs and higher lows at the beginning, right? But our first signal for a trend reversal would be once we see price breaking below this most recent low. This is our first signal, but the trend reversal is not yet confirmed. Now, a second signal would be once we see price creating a lower high, lower than this previous one. And then once we break below the most recent low, we're talking about this one right here, well, we now have a trend reversal, and it should be confirmed. But what tends to happen quite often is we see the market going back to the upside, basically continues the uptrend. And this kind of choppy price action is what confuses a lot of traders, and you're now lost, you don't know in which direction you should be trading. Well, I'm going to teach you exactly what you need to know so you don't become a victim of this price action trap. So let's have a look at this example here on the Australian dollar versus the US dollar. We're looking at the 1 hour time frame and it looks like we're looking at a trend reversal as well. Now, before that, we were moving in a very clear and well-defined uptrend, right up to this point where price starts trading sideways. Now, our first signal for a potential trend reversal is right here, where we break below this most recent low, right? Now, before that, we had another bearish leg breaking below previous structure, but even right here, we're still in an uptrend, technically, because this low is higher than this previous one, okay? Now, how do you know whether this is just a deeper pullback within the uptrend, or is this an actual trend reversal? Well, you have to measure the bearish impulses, and I'm talking about those bearish legs right here. Okay, now if you're looking at an uptrend reversal, and I'm talking about price moving in a downtrend and then going into an uptrend, you're going to be measuring the bullish legs. But we basically want to see whether there's more momentum in price that will tell us whether this is an actual full trend reversal. So we're looking at this first bearish leg, and right here we've got a move of about 65 pips to the downside. We then have a pullback, we form a lower high, okay, which is another confirmation that the trend may actually change its direction. And we're now going to measure that second bearish leg all the way down here. Now we've got 109 pips to the downside. That's almost twice as much as the first one. And that also means in the matter of about 5 days, a full trading week, we can clearly see that there's more sellers coming into this market betting against the Australian dollar. And that's how we know that there's more momentum to the downside. So that means the next time price comes back for a retest of this horizontal level, this is our most recent key level in price, we can then start looking for selling opportunities and we can take advantage of those moves. But we now have more confidence that the price will actually continue lower because we've got a perfect confirmation from those bearish legs that tells us, listen, there's more sellers in this market, so you should be selling. And this is how you recognize trend reversals compared to fake price action moves. Another tool that you can use is also the Fibonacci expansion tool. So we're going to place the Fibonacci expansion on our first bearish leg, and this is where the 100% move is. Now, if price reverses to the upside above that 100% move, well, that probably means we're going to see an uptrend continuation. However, as you can see, we move way past below that 100% mark, and we actually reached that third target of the Fibonacci expansion tool. And this is another way to see that in this move right here, we've got a lot more selling pressure than we had in the first bearish move. And again, that's how you know that we're probably going to have another bearish leg, just like we have right here. If you found this video helpful, make sure to drop your comment down below and check out the links in the description of this video. You can join our free Telegram channel where you can find more valuable trading information. I'll see you next time.